Hello and welcome to the new trading week. Of course, this is The Trade. My name is Kyle Rod. It's wonderful to have your company, and of course, sentiment is reasonably positive out there. So to kick off the trading week, let's go through what's hot and what's not, perhaps. Louise Bedford from Training Game joins me live via Skype. Louise, great to see you there. Great to have your company as always. And I believe for the first time in 2023 too. So Happy New Year. But let's kick things off because we like to take a look at the charts of several ASX sectors or the All Ordinaries to start with. Let's get that chart up. What are you seeing there?
Look, the All Ords has been in a wonderful situation in terms of technical analysis. You can see those two circles that I've circled above as well as two circles below that price action. Now, I'll tell you what I'm looking at here, and Kyle, I'll be interested to hear if your view replicates mine. What we can see is a series of higher lows and a series of higher highs, and we are at quite a critical juncture here. We've got a long green candle finishing at or near its high, tiny little wick, tiny little upper tail there. That is very bullish. We're above our 30-week moving average, and if we have a look at the volatility is quite low at 2.57%. So what we've got here is a lovely setup for people who are liking to go long in the market.
Yeah, definitely. And I've noted a few of those, I suppose, patterns on several global indices, which we will get across, but especially their All Ords and the ASX 200 seemingly creating a fairly firm double bottom there and starting to show signs of perhaps reversal, at least fingers crossed for the equity bulls out there. But let's get to the Small Ords because it was an index that we spoke about last time, really as being one that's on the not list, very economically sensitive. There's sort of roughly the fundamentals there. But just having a look at this chart right now, while we're seemingly breaking through something of a confluence of levels here, what are your thoughts?
The thing that I've really enjoyed watching is, as we're recovering from this bear market, is watching how it filters through from the highest level of market cap all the way through down to the smaller levels of market cap. Kyle, at the end of last year, we were watching the top 20 start to produce buy signals, then the top 100, the top 200, the top 300, and look now where we're at. We're not quite at a buy signal level, and I'll describe why in just a moment. But the interesting thing is we are down to a much smaller market cap in terms of having some bullish signs. So let's look at this chart, the Small Ords, the XSO. Now we are currently trading at, unfortunately, we're still under in terms of the RSC, the relative strength comparison, in relation to the All Ords. So this is underperforming compared to the All Ords, but look what we've got here. We've got a very established downtrend line and quite a firm base. So we've got the formation of a descending triangle here. Now, typically, descending triangles break in line with the direction of the trend line. However, when they break upward, that is a very strong bullish sign. So we've got a lovely green candle there, tiny little upper wick above its moving average. We're not quite ready in terms of a technical buy yet though, because we are not outperforming the All Ords. And if we have a look at the next chart, which is the Small Industrials, the XSI, you'll see a very similar look, not quite so bullish. That green candle isn't quite completely above that moving average. What I often look for is for that trigger candle to completely clear the previous level of resistance, which in this case, it could be a downtrend line in a similar location to the Small Ords. It could even be a horizontal line, but that little new candle that has just formed hasn't quite jumped over either of those, and it's underperforming the All Ords as well.
So is this for you, perhaps, if we can find a little bit of a story around this, that the industrials are something of a proxy for economic growth and therefore perhaps profits going forward, and when you start to see these price signals emerge, it's a signal of expectations that economic activity is turning around?
Carl, I love your theory there. Actually, as a technical analyst, I'm not looking at anything in terms of trying to predict what could happen or even understand why. All I look at is the signals on the chart. I act on those signals and I use a written trading plan to determine my entry, exit, and position sizing. I love your thoughts though. It's most likely exactly the way you've described.
Yeah, well, perhaps you can bring the technicals, and I'll tell the story. We'll be a hell of a duo. But let's get to the US now, and some of the indices that obviously we keep a very close eye on as a barometer of sentiment, but also a lot of folks out there are trading these indices. Starting with the NASDAQ, let's take a look there, because perhaps, and I dare say, in contrast to some of the small ords, the all ordinaries, not yet showing strong signs of a reversal. Obviously, a key level there being supported, but certainly not a buy signal on that chart yet.
You're quite right. I mean, have a look at that last green candle. Isn't that valiant? Swimming against the tide as it is. What it's trying to do there is say, hey, I have got some level of bullish enthusiasm, but in terms of a weight of evidence, which is what we're looking for, that is not enough evidence to act. We are below our moving average. That's a 30-week moving average, a nice medium-term moving average. We have got a downtrend line, which is reinforced with at least 4 points there, which makes it an incredibly strong downtrend line. And also we've got quite high volatility. So anything over 5% in any market from around the world, I find a little bit more difficult to trade. It means you have to have your stops further away, and you've got more of a chance of getting pinged out just by an errant tail.
Yes, I can tell you several stories about that one. It's the bane of my existence. I'm sure many other traders as well. But let's go to, the S&P 500 now. It's the global benchmark, I suppose you could say, in terms of at least market sentiment. Obviously, the benchmark for US stocks. Now, as opposed perhaps to the NASDAQ, which is obviously also very, tech heavy, looking a little bit more positive. That 30-day moving average is below the price right now, and what's that? We're looking at that next key level of resistance, perhaps as our buy signal. What's going on there?
Quite right. It is a little bit more positive, certainly in terms of I've used exactly the same gradient here, so we can compare between charts. If you have charts using a different time frame, you cannot compare gradients, but the gradient of that downtrend line is a slightly less steep downtrend in comparison to the NASDAQ. So a lot of the heat is being driven by those NASDAQ stocks not being bullish, and that is also pouring into the S&P 500. We can see here that the volatility percentage is slightly better than the NASDAQ, which gives it a tick, but in terms of extra ticks for that weight of evidence, we are not there yet. We would be looking for a series of higher highs, a series of higher lows. We want that downtrend line to be totally cleared, preferably jumped over by a beautiful, pretty green candle. That would give me a big kick.
Okay, so we'll have to look out for that pretty green candle, of course, still to come. Let's hop over to Europe now, if you will. We're sort of traveling the world today in some sense. And this looks terribly constructive, really, breaking through a major level of resistance. Does this mean we should, I suppose, be bullish on British stocks?
Isn't this interesting? Because I don't think in terms of stocks when I think of the FTSE, I think in terms of options. My instant thought was, I hope those option call writers really saw this coming, because with a call out there over the top of the FTSE, you probably would have been pinged off. You can see that final green candle with the tiny wick. That has overcome the most recent 2 resistance levels. Usually for option writers, we're looking to write 2 levels or more above an index. So let's hope they all covered their positions in time. In terms of a bullish sign for stocks, technically, yes, we're above our moving average, but wow, I am looking for a much more bullish sign before I'd be investing in FTSE stocks. We are looking at a candle that has just managed to overcome a significant level of resistance. I would want more weight of evidence before I acted on this. And if we have a look at the other 2 charts that I've prepared for us today, the the CAC and the DAX. We'll start with the CAC. Isn't this interesting? We've got a similar look here with that green candle above resistance. Just flick over to the DAX for me as well, and we'll see something that looks incredibly similar. So it's interesting, we are seeing those signs of strength from around the world, as you said, Kyle.
Yeah, absolutely. European stocks, for all their woes, I suppose, showing some positive signals there on the chart. So that's the I suppose the suite of markets that we did want to look at today. But as always, I do like to distill things into perhaps a key takeaway or two, especially because at the moment it would seem that sentiment's getting quite bullish. The news media is starting to turn around a little bit, and sometimes that can raise questions about whether this is a signs of greater momentum to the upside, or maybe things are people are getting a little ahead of themselves. With the way that we should be approaching the markets, especially with what you've just shared with us in terms of price signals, what should the folks at home take on board this week with their trading?
Concentrate on weight of evidence. What you're looking at is for a paragraph, not just a sentence. You want several pieces of evidence pointing in the same direction before you act. It's very important that you can find that to a written trading plan or a checklist, so that you've thought this through before you act in terms of putting your money where your mouth is. So we're looking for a series of higher highs, a series of higher lows. We're looking for it to outperform a major index. So if you're looking to trade French shares, you're looking to outperform the CAC, for example, using the relative strength comparison, and make sure that when you do act, that your trigger is definitely leapfrogging that layer of resistance or that downtrend line before you get too bullish in any particular market.
Well, it's a fantastic takeaway, and really appreciate, obviously, you setting us up for the new week. And while it's great to talk to you again in 2023, looking forward to our next conversation. Louise Bedford from Trading Game there. Thanks for your time.
Thanks, Kyle.
Okay, well, we've actually got the first edition of Startup Daily coming up in about 5 minutes' time. But before we take you there, I'll just give you a quick check on what the ASX is doing, because it might be good if you are watching out there just to have a sense of things before we do focus on the world of startups. And it's a really positive start to the week, 0.77% higher, and remarkably broad-based gains. If the ASX website is to be trusted, and why wouldn't it be, all 11 sectors are higher to begin the week. Now, I would assume it's probably a low volume day, not just because it's the holiday season, but because also we have the United States offline for the Martin Luther King long weekend. But nevertheless, extending that run higher, and we're just below 7,400 at the moment on the ASX 200. So really, really solid out there to start the new week. I asked Louise just before, is that a positive signal or is it a contrarian one? It's probably a bit more complex than that, but nevertheless, bullishness reigns just for the time being. But that does do it for this edition of The Trade, the first one for the week. Be sure to tune in tomorrow, and the rest of the week we'll be back with all the trading action. Thank you for watching.
The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.